This show is going to be about the declining sales for US autos and also the global auto sales in China, India, and elsewhere. There's also other things about the auto market that's showing that this is a leading economic indicator that things are getting a lot worse. I talked about this, whether this is subprime auto loan default or record amounts of inventory of used cars and cars coming off leases piling up at used car dealerships or the regular dealership, and they can't get rid of them fast enough without even discounting. So in February, I talked about this story from the New York Fed that the auto loan delinquency rate was at the highest level since 2012. I did a podcast on that. The story's in the archives. I'll probably put the link to that video at the end of the show after the show's over. So back then in February, the number of auto loans that are at least 90 days late surpassed 7 million at the end of last year, at the end of 2018, the highest amount in 19 years that the Federal Reserve Bank of New York has been keeping track of the data. The Q4 delinquency rate of 2018 for auto loans rose 2.36%, rose to 2.36% of total debt, its highest level since 2012, according to the report. Meanwhile, there were 144 billion in newly originated auto loans in Q4, totaling a record of 584 billion dollars in auto loans in 2018. A lot of those loans were very long-term auto loans. They were teaser loans where you didn't have to make any down payments for a while, or it was a minimum down payment or no down payment because inventory levels were already starting to get high, so they were trying to clear inventory. And I remember I was getting paid to do some research work, and I was looking at this company called Credit Acceptance Corporation, which is CACC Chris on the NASDAQ. And about a year ago, the stock was still going up a lot, and it hadn't corrected or crashed or anything like that. And really, it looks like this is just my opinion, since September, the stock has really started to make lower highs and started to go down into a downtrend. The chart starts to get really bad on November 1st. So it's starting to have some hiccups. I'm not saying this is just my opinion. Again, stupid disclaimer, if you're looking to get rich quick, don't go shorting any of these stocks. But the auto industry, there's a lot of data that's been coming out for the last couple months. A lot of stories, a lot of data that the auto industry, whether it's China, India, first of all, China's had declining auto sales now for 12 months. The data just keeps getting worse. In September and October, it's been dropping still. There was another story that came out 17 hours ago on Bloomberg. Well, actually, it's 18 since I had the window open about an hour ago. But China is now considering cutting electric car subsidies again. So Tesla's picking a bad time to open. I guess they're spending the Chinese government's money or whatever. And Elon's in bed with the Chinese government now. But they're not picking a good time to start selling a lot more electric vehicles in China. Should have done it 5 or 6 or 7 years ago, because the Chinese auto market is rapidly falling. Auto sales fell 12.4% according to another research report in the first half of 2019 in China. In September alone, they dropped another 6.3%. So they're spiraling. They're in a very big downward spiral. I have this Bloomberg article open. This article is from September 9th of this year. And India auto sales take a record fall for the 10th straight month of declines. I think this might have been the biggest drop in auto sales in India recorded on history. So car sales in India, this article is from Anurag Kotoy. Okay, I think I pronounced that all right. Car sales in India suffer their biggest monthly drop on record as the slump in the country's auto sector shows no sign of letting up. Delivery slid 41% in August from a year earlier to 115,957 units, while sales of passenger vehicles, including SUVs, fell 32%, according to data released by the Society of Indian Automobile Manufacturers on Monday. So that was from September. Truck and bus sales dropped 39%. Two-wheeler sales, a key indicator of demand in rural India, fell 22%. So this is an enormous collapse in auto sales. China auto sales, India auto sales are down. And there's more data that's been coming out, stories that have been coming out in the US since September, whether that's rising old used car prices help push poor Americans over the edge, or how a lot of cars are coming off lease and the used car inventory is piling up like crazy. So used car price, so some of the used car prices are collapsing. It's a mixed market there. So some of the used car prices are going up, and other ones people can't get anywhere near the amount of money they thought that they were going to get back. But I guess a lot of dealerships are offering much higher than book value trade-in to just so people trade into a new car. Car companies, if you're not familiar with financing with dealerships and the car financing, the car companies make more money off the financing normally than they do off the car. The dealerships normally make very, very little off the car itself. They make tons off the financing now. That's how crazy everything's been. And dealerships normally are not equipped anymore to take cash, to either take cash for a car or a check. They're not really equipped to that. It's very shocking for someone to see that. But in general, the car industry, most people are not aware of this, but if you read a lot of value investor books about business, you'll understand, in general, the car industry is not a good business. It's very cyclical. It's very capital intensive. It requires a lot. Most people are not aware of this unless you've either researched the auto industry, you've covered it, or you've worked in the auto industry. But it takes a lot of money for a company like General Motors or Ford or Mercedes or BMW. I'm not sure if Tesla's spending that CapEx yet or not. I haven't looked. I know they don't have a lot of their CapEx funded. I know they don't have any of their growth CapEx funded. I'm not sure about their maintenance CapEx. At some point, it's going to come back and bite them if you can't continue to raise capital. But in general, the car industry, every few years, like every 3 to 5 years, a factory has to be retooled, and that is very, very expensive. So it's up there with costs on mining. And when you're spending that much cost, again, back to maintenance CapEx, it's an important, if you're going to understand a business and you want to try to avoid businesses that have a lot of direct exposure, you don't want to be a long-term investor, just my opinion, with any businesses that have a lot of exposure to maintenance CapEx. Because when businesses like factories for car factories or mines or oil and gas, those maintenance CapEx bills are enormous. They're enormous sunk costs that the company has to put in just to maintain revenues, even if sales are collapsing, even if commodity prices have collapsed or in a bear market. So there's a lot of things that can go wrong in very capital intensive businesses with those types of maintenance CapEx. And that's how General Motors, besides the GM financing arm, General Motors got into a lot of trouble, or Government Motors. General Motors, sales declined a lot in 2008, and they needed a government bailout. They have all these government contracts anyway. They have most people who are not aware of this, General Motors has an enormous amount of sales to the U.S. federal government. I'm not sure about state governments, but at least for federal government, I think they have still a decent amount of sales to police forces, although I think some of these police forces are starting to use Teslas now, which are not too good. I've seen some of these epic fails on videos. Have you seen any of these policemen with Tesla cop cars where they've tried to go in chases and they failed? But General Motors, very capital intensive business, lots of retooling. They have problems, with unions. So the union normally wants to renegotiate wages. That could hurt General Motors. And then they get stuck even if car sales decline and inventories are piling up and General Motors can't channel stuff. Then they have to pile on the maintenance CapEx to retool factories. So there's so much extra costs in the business. That's why it's not a good long-term investment, because all the capital intensive, it's very cyclical. So the consumer will not always, I think the data I've seen is that normally now consumers are waiting longer and longer all the time now to trade in for cars. So occasionally you're going to get like the more affluent person who's going to either change leases or buy a new car every couple of years, but the average person doesn't do that. The average person will drive a car, 10 years longer or longer. They're going to get every last ounce they can out of the car. They're going to get the full warranty. They're going to do things like that. So they're not, and the car industry does not get a lot of extra sales when people don't change in cars and upgrade cars. And that's why the car industry has been switching, to this dealership model for service and charging all this money because they're trying to generate another revenue stream. But selling cars themselves, the car industry doesn't make a lot of money off that. The gross margins are not high for selling cars, and the net profit margins are very, very low. It's actually a really, really bad business long term. which is funny because that's what Tesla's moved into. It's a long-term cars are a really, really bad business. So I have a bunch of different, General Motors stock is still at $38. It's rallied since September. It's rallied, but it's starting to have some volatility, a lot of volatility here, it looks like, since February. There's been a lot of ups and downs on the chart. There's a lot of volatility. So recently there was a story that the auto sales picture, this story is from October 2nd. So I've been compiling these stories. I've been waiting for more than one story, like a handful of these things to put together, so people can research this topic and see just how bad things are starting to get, not only in the U.S. auto market. And Tesla announced recently that their revenues in the U.S. for U.S. sales have dropped 39%. So that might be a combination of things because they're not selling as many electric vehicles here, and also because they're discounting. But in general, sales are down across the board in the US and globally. So this story came out on October 2nd. So the collapses here. Initial US auto sales for September paint an ugly picture. And Toyota, Honda, and Nissan all had enormous drops. So analysts were expecting pretty bad drops in sales. And the actual sales drops for year over year for Toyota for, I think, Q3. At the end of Q3 2019, their drop year over year was almost 17%, 16.5%. Honda was minus 14% sales, 14.1% sales in the US minus, and Nissan was minus 17.6% sales in the US. So there are falling sales. Ford has had big problems with their credit. Wasn't their credit just downgraded to junk? So the auto industry and is going through a lot of problems now, and things are probably going to get a lot worse. When I was looking at that Credit Acceptance Corporation stock, it was really weird because I was reading articles on the research, and I was looking at what the average subprime auto loan default was, because there's been record amounts of subprime auto loans for years now. The amount of subprime auto loans in the U.S. has been increasing a lot over the last 6, 7, 8 years, really since the couple years after 2008. A lot, and cash for clunkers and all that garbage, and a ridiculous program. The subprime auto loan sales have exploded. Banks like Banco Santander and HSBC and Ally Financial, which I think General Motors spun off. So those and then Credit Acceptance Corporation, they just went crazy with the amount of auto loan sales. If you look at a chart of Credit Acceptance Corporation, it's just since 2010. Well, actually, let me look at the chart since 2009. So since November 2009, the stock was at $33.63, and it got as high as, I think, 500 or just under 500. Got up to $400, I think, $94.89 on July 12th, 2019. That's insane growth. That's a ton of revenue growth. They did a ton of subprime auto loan business growth. And I was looking at, this was about a year ago when I started researching the company, and a lot of the stuff when I was researching it, I didn't think it was a short because a lot of the stuff I was looking at didn't make a lot of sense. Their delinquency rate for subprime auto loans was much better than what the banks were claiming for subprime auto loan delinquency, what the industry average was claiming. So either they had the best actuaries, the risk assessors, they had the best people who were able to find the best quality subprime auto loans and get less than 50% delinquency compared to the industry average in the banks, or there was some enormous red flags that I couldn't figure out what was. Maybe it was, this is just my opinion, not financial advice, maybe it was some special purpose vehicles, because a lot of times when these companies are growing revenue, they will only want to show the good stuff to Wall Street and the retail investors. So the revenue growth and earnings, and they move all the bad stuff, the bad risks. They tend to try to figure out a way to hide them. So maybe they hid them in a subsidiary, or they hid them off balance sheet in a special purpose vehicle or something. There was just a lot of red flags when I was looking through that company doing research. And it was not a short back then, but it's starting to falter now. The stock's starting to look interesting. I mean, I'm not shorting anything, but the auto loan industry, subprime auto loan industry in general, and the auto companies in general are looking very shaky here, very volatile. Okay, so let me talk about, there's also CarMax, KMX. They have an enormous auto loan business. No, not, well, they do have auto loans, but they've used cars and auto loans. So that stock's been very volatile since January. It rallied from $58.78 per share up to $93. I think CarMax makes more money off the auto loans than they do off selling the cars. They get big profits on the financing. And I think a lot of Americans, unfortunately, don't have a very high financial education. So I think a lot of Americans only really care, and I've heard a lot of anecdotal stories about this over the last handful of years, about Americans who want new cars, and they only care about being able to make the payment. They're not thinking about paying off the auto loan or how long it's going to take. They only care about being able to make the payment each month. And that's how, really, with the financing option, that's like only making the payment on your credit card each month, the minimum payment. It's very bad. And that's how these subprime auto loan financing companies and the used car dealers, that's how they make so much money. Because you're not paying off the principal. You're only making the minimum payment. So watch CarMax. Watch General Motors. Ford definitely has a lot more problems right now than General Motors does. Although General Motors, you'd have to think with all the things with the United Auto Workers and, their costs going up and having to retool factories, more capex coming, and sales. Right now, General Motors is making $6.14, trailing 12-month multiple earnings per share. So they have very large earnings per share, probably with financial engineering, with share buybacks. I haven't looked at that. And they have a 4% dividend yield. So right now, the stock for General Motors looks good. However, if the real data in the U.S. economy gets worse, that stock's going to get creamed. That stock, let me look up from 10 years ago. It could go down very quickly. Let's see here. What was it in 2009? Oh, that's right. It reorganized. They reissued it. It says it doesn't exist. It doesn't exist before November 8th, 2010 on the chart here. That's right. Government Motors reorganized. So the auto business in general, very, very difficult. BMW and Mercedes-Benz have very high gross margins and high net profit margins. I believe some of the highest in the industry of any of the largest publicly traded companies. When Tesla was just making the Roadster, they had very high gross margins, and the Model S. But now that they're making lower quality cars and not selling them at a premium, those days are over. And did you guys see the Twitter war today between Elon Musk and David Einhorn below the Zero Hedge tweet? There's craziness there. Oh my God. So the auto sales, I expect them to continue to get worse. I talked about this in February. They're a leading economic indicator that the real economy, the global economy, and the real economy here in the U.S. was just going to get worse and worse. This story came out 10 days ago, October 27th. Subprime auto loans defaulting at fastest rate since 2008. Growing portion of Banco Santander's subprime auto loans are starting to sour sooner and at an accelerating rate, according to Bloomberg. Now loans made as recently as last year are going bad at the fastest rate since 2008, with, quote, more consumers than usual defaulting within the first few months of borrowing. That's because these financing companies, the dealerships, are just trying to clear inventory and giving the loans, the cars and the loans, to almost anyone with a pulse. Are they even putting any money down? And a lot of the people they're giving loans to are very similar to the same subprime housing borrowers or ninja loans. No income, no job, no assets. And those people, anyone who can fog a mirror for the last 5 to 7 years, almost anyone who can fog a mirror has been able to get some type of auto loan. Okay, they gave out auto loans to people who should not have gotten auto loans, people who could barely make the monthly minimum payment. very unethical, very dishonest. I have another story I'll read for another show about how now that the politicians went after, especially the Democrat politicians went after payday loans, that a lot of the stuff moved online. And it went from, it's now like all these crazy, worse than Loan Shark, worse than credit card interest rates. Actually, it's right. It's at Loan Shark interest rates. It's worse than credit card, a lot worse than credit card interest rates. It's these online monthly installment plans. And the size of that market has exploded. I'll read a story on that for another show. Tesla's going to have to deal with a lot of unions in Germany, and he's been having problems with unions here in the U.S. Joel says most Japanese cars are higher quality. I own a Toyota. I think it's pretty high quality. I've owned it for a while. Some of the American cars are built nowhere near as good as they used to be, unfortunately. I really think it's stupid how you put ethanol in the tank with 10% ethanol. I think that's stupid. That's like a subsidy that the Republicans, George W. Bush and the Republicans in Congress gave to the corn farmers. Putting ethanol in the gas tank, 10% ethanol, is really stupid. Oh, thanks for the super chat, Penguin. Okay, so I'll take a look at listener questions and comments, and then all these articles, and there's a lot of them, will be in the information and description section. So if you want to monitor the auto industry, take a look at like General Motors stock, CarMax, and this Credit One, which is Credit Acceptance Corporation. Chris. Also, there's Banco Santander, which has an enormous amount of subprime auto loans. It's very disproportionate from what I've heard. Maybe they're the ones in the repo madness because the auto loans are going bad that fast. Maybe it's Banco Santander. Maybe they're one of the banks. Finance and Economics says they need to discount some of those new vehicles 70% to get them off the lot. So, if they do discount the actual cars that much, if people do it on financing, they can make a lot more money still. So, if someone doesn't pay a lot of the money up front or put down a large down payment on the car companies, the dealerships, and the car financing companies or the banks, whoever the auto loan's from, can still make a lot of money on the auto loan if they don't default. Anthony asks, don't dealerships just write off unsold inventory? So there's only so much you can write off, Anthony. So the dealerships are required, if you're familiar with the dealership model, they're required to buy cars even if they don't want to buy them, even if they already have too much inventory. So there's already channel stuffing built in. In order for you to be an official dealership of one of these car companies, there's a minimum amount of cars, and the car manufacturer can change that, and you have to pay a certain price. So even if your inventory is already from the year before piled high, you still have to buy a lot more inventory than you want. The dealerships make a lot of money off of servicing the cars, and financing. They do not make a lot of money off selling each car. Off the car themselves. They make money off the financing. Off the auto loan. The car themselves, some of these dealers make, some of them, if it's razor thin margins, it could be like under $1,000 per car. But then they might make tens of thousands off the car depending upon the auto loan. And then depending upon which car, if it's like a fancier luxury car, then your service bills are going to be enormous. Like for Mercedes or BMW, if you go to the dealership for Mercedes or BMW, normally you're not leaving one of those dealerships. Even if you have a coupon, you're not leaving without spending normally like at least $1,000. They're going to find a way to charge you $1,000 for something. Indico says the same farmers are conservative and hate socialism. Yeah, a lot of people are hypocrites. At this point, all I do is call out both political parties. People in both political parties who are hypocrites. Yeah, the service at a dealership can get very, very expensive for like Mercedes, BMW, Porsche, you know, all those. The service is through the roof, even if it's something pretty minor. You would get if you could pay off the auto loan quickly, you might get a better deal by financing, but I wouldn't. The average person should not be doing that, in my opinion. Yeah, they may give you a teaser. They may give you a teaser to clear inventory. There's an abundance now of leased cars. There's a Bloomberg story that, let me pull it up. Bloomberg story from October 10th. Used car price tumbles as spells trouble for auto market. A growing number of leased vehicles are landing in used market. Falling used car prices last month from September 2019 were a major contributor to a subdued inflation for the U.S. economy. So this is the official government statistics. Obviously, we know that the real economy has a lot of stagflation, but there is falling auto prices and used car sales, according to this article. Although I have a Reuters article that somewhat contradicts this from, let me see the date here. I think it's also from October. It says rising old used, so certain used car prices are rising, but other ones are collapsing. So it's a mixed market. Yeah, people are probably going to stick with the cars they have, and they're going to repair those. So yeah, AutoZone is not just my opinion. I haven't researched AutoZone, but from a global macro thesis, yes. AutoZone looks like a good company. Because most people are not going to want to switch to new cars. Ed says most people buy 3 to 6 year old cars. Well, then the car companies are in terminal decline because they keep producing massive amounts of new cars to appease Wall Street. They're not cutting down the amount of cars they produce. They're ramping up. Most of them. So then that means more channel stuffing, more financial engineering. The dealers are getting shoved a lot of cars down their throat that they have to pay a very high price for that they don't want. I read a very long book on the history of Ford Motor Company, and even Henry Ford was doing channel stuffing. The great American entrepreneur and industrialist Henry Ford. Yeah, I know about his political stuff. How he was a Nazi sympathizer, I'm aware of that. But I'm just talking about his business acumen and his building the Ford Motor Company after going bankrupt a number of times and failures. Even Henry Ford was doing channel stuffing. It was talked about in the book. I think the reason truck prices are doing well is people can use trucks or vans for their business. So you have a lot of small business owners or independent contractors or people in construction. They're using those trucks and vans for work. So those are business investment. There's more write-offs on those. You can write off the mileage, what with MileIQ, that app. So I think that's why there's more of a demand for trucks and vans. That market, I would say, is more insulated. Now, big rig sales, I covered this as another leading economic indicator because that's moving goods. The sales of the big rig trucks have collapsed. That's been bad for over 12 months, too. Those have been totally collapsing. I think the sales in the US of the new big rig trucks have collapsed like more than 80% in the last 12 months. So they've made way too many of those large big rig trucks. Wow, that's like screen name number like 5 or 6 for that troll. That's funny. He's persistent. I will give him that. Joe C says, all new cars will be electric. Joe, that's not by choice. That's not by the free market voting. That's by politicians trying to force it down our throats. The European Union is trying to force everyone to buy electric only. That's not the free market voting. That's politicians forcing things down our throats. That's central planning. There's big problems with electric vehicles. There's not enough charging stations, nowhere near enough charging stations. The battery distance, you can't go long distances. There's nowhere near enough charging stations. Now, I've heard the European Union has great public transportation with trains and other public transportation, but there's nowhere near enough charging stations in the European Union for the ambition that they want to do with the electric vehicles yet. They have to install a lot more charging stations. And the US has nowhere near enough charging stations. And if you've seen the videos and the stuff on Twitter, in Tesla Q and elsewhere, there's tons of people in the Tesla supercharger network that are not getting paid. That have set up superchargers and haven't been paid. It's more common than that with Henry Ford. He actually wrote letters to Hitler, if I remember correctly. He was corresponding with Hitler. Yeah, electric vehicles are not really free market. There's tons of tax subsidies on them. And in the European Union, they're trying to force everyone to only electric vehicles, and I don't think they have the infrastructure there yet. Sonny says the grid can't handle electric vehicle charging as is. I totally agree, Sonny. Plus what? Are we going to burn more natural gas? So that's going to put... that's going to still be fossil fuels, although it's going to be less pollution than coal. Can everyone be charging their electric vehicles at night after work? I don't think our grid can handle it. I've read books and articles about the electrical grid here in the US, and most of the experts I've seen describe the US's national electric grid as quote-unquote bubblegum and duct tape. That's how bad the US's electrical grid is. Where if a couple trees, if there's a bad wind or ice storm, or a hurricane goes through the wrong path that it could knock out like the eastern seaboard, or a cybersecurity event, it could knock out power for weeks. Annika says the European Union won't meet their goal until 25. No. The European Union is planning on doing this, in 10 years? They're being very ambitious. I don't think they're going to get it done in 10 years. Yeah, but not everywhere has... You're in Vancouver and you have hydroelectric power. Not everywhere has that. I mean, California has to import a lot of their electric power. California, people aren't aware of this. California imports a ton of their electric power from Nevada, Mexico. California imports a lot of power. California is a disaster. California is like the textbook definition of waste, fraud, corruption, and abuse here in the United States, along with Washington, D.C. Why is the dollar still rallying? Because people who have dollar-denominated debt need dollars, and people are retreating from emerging net capital outflows. People are retreating out of emerging markets, out of China, out of European Union. They're going into dollars. So either they need dollars to pay off dollar-denominated debt, so there's a demand component built into that, and there's record amounts of dollar-denominated debt globally, or they're going defensive, and they're going into dollars for a different reason, for safety. Because the perception is, and I talked about this yesterday, that the dollar is the cleanest dirty shirt in the laundry basket, or the best horse in the glue factory. You can pick your analogy. Well, here's the thing about the milkshake dollar theory. If the dollar gets too strong, it will collapse everything. So if the dollar rally continues, there's too much dollar-denominated debt outstanding, it will collapse everything. And the Trump administration, the Federal Reserve, the U.S. Treasury do not want a strong dollar. They want a controlled devaluation. California is owned by the PayPal mafia. What's that? Peter Thiel, Elon Musk, and who's the third guy? Franco-Nevada should not be looked at as a price-to-earnings ratio. It's a growth company. They're growing their operating cash flow another 50% in the next 5 years. Plus, they increase dividends every year. If you just look, let me put it this way, Matt. Franco-Nevada looked expensive 6 years ago in 2013 when I was as an analyst working at Investing Daily. It was $40 per share back then, and the gold price was falling. People complained about Franco-Nevada back then. If you would have bought Franco-Nevada 6 years ago and left it alone, not looked at your portfolio, you would have gotten a dividend increase every year, and it would have more than doubled. And people are still complaining. The people who just look at the PE ratio on a cash flow growth company like Franco-Nevada don't understand the business. Franco-Nevada is still growing. They're growing pretty rapidly. They're not growing as fast as they did in the past. In 2008, 2009, Franco-Nevada had a market cap under $2 billion, and they copied the Goldstream model from Sandstorm Gold because Nolan Watson invented the Goldstream contract. Franco-Nevada had only done gold royalties and oil and gas royalties before that. And then Franco-Nevada turbocharged their cash flow growth. They started doing crazy amounts of deals for either immediate cash flow or near-term cash flow with gold streams. And that's how Franco-Nevada went in the last 10 years from market cap under $2 billion to market cap above $14 billion. With the dividend increase every single year, and they basically have grown their revenues every single year, regardless of what the gold price has done. That is an impressive company. That is the model company. So yes, its PE ratio is high. However, its cash flow growth is real. Every time, what people don't understand is, and this is only what the really good analysts understand, every time they do more deals for cash flow, they are diversifying their portfolio of cash flow assets. And what the market is doing, the more sources of diversified cash flow they have, the higher multiple or valuation that Franco-Nevada receives on those diversified cash flows. Capiche? Okay, so if you just look at PE ratio, you're going to totally miss out on the growth. Because people were complaining about PE ratio on that stock more than 6 years ago. And meanwhile, the stock has produced unbelievable returns in the last 10 years. It's outperformed Berkshire Hathaway in the last 10 years. And it's been one of the top performing companies, dividend paying companies, for a while now. It's really, really good. I'm hopefully cautiously optimistic someday Sandstorm Gold will be close to Franco. They have a long way to go, but they are making good progress. But the market loves how they keep adding more diversified cash flow. And unlike these gold and silver miners, when the paper price gets smashed and the gold and silver miners are like, oh my God, they start to panic again. The larger royalty and streaming companies are like, oh yeah, now it's time to do more deals. Now it's time to grow more. Let's take advantage of this opportunity of the correction in the gold and silver price. The gold and silver miners are not doing that. You don't see these gold mining CEOs do smart, contrarian, counter-cyclical deals normally. You're going to see these gold mining CEOs do a lot of bad deals when the gold price is above 2,000 in the future. Okay, well, that's it for right now. I'm getting tired. All the links to the auto loan markets, whether that's here in the US, the bad data, and I'm sure it'll be getting worse because the real economy in the US is getting worse. The consumer there's a lot of data out there that the consumer is out of discretionary income, getting killed with stagflation and taxes and lies. So people are not going to be buying new cars. Unless they have more disposable income and some savings. But the average consumer doesn't have that. The average consumer is very, very strapped. So they're not going to be buying new cars. And the data for car sales in China and India is really, really bad and getting worse. So thank you very much to my almost 200 Patreon account contributors. Hopefully there'll be 200 by the end of this year. Pretty close. I think a little under 10 now. So pretty good. Thank you very much to my dozen or so monthly PayPal contributors. It's much appreciated. Thank you for the people who throw a tip once in a while. If you're artistic and you're good at making like some of these funny political cartoons or economic cartoons, and you want your work marketed for free on my channel as a background to the audio, like a podcast background, you can email me, wallstreetfrommainstreet@gmail.com, and I can help promote your artwork, and I can get some cool backgrounds for my channel. Okay, well, that's it for right now. Everyone have a great weekend.